You check out crude oil, staging a comeback today after dipping to its lowest level in 6 weeks. But despite today's bounce, the Chartmaster is calling for a crude collapse. Carter Worth of Worth Charting joins us now. Carter, what are the technicals telling you?
Well, they don't say collapse, but they would suggest that the weakness that we've seen is probably not finished. Let's look at a handful of charts and figure it out together. So here's a short-term 6-month chart of WTI. And what we know, of course, is those lows in August at 61.50 a barrel, we surged all the way to 85 in the course of 3, 5, 7, 10 weeks, up $24 a barrel, up almost 40%. And then the collapse, minor collapse, of the past several sessions. We're down 9% peak to trough. Next chart. This is longer term and keeping an eye on that channel that we just sort of deconstructed together. Look at the internal trend line in effect over the past year. Now, what we know, next chart, is that WTI has failed to the penny 3 times, and this current failure is quite clear, at that internal trend line. And the drawdowns are very straightforward. The March sell-off down 15%. The July-August sell-off down 19%, and this one down only 9%. So the question is, are we going to escape with as minor a sell-off as 9%, or is it going to be more severe? Certainly in the context of the rising dollar. I think more severe. So final crude chart, next chart. If and as we were to drop to the lower band, we're talking about something that would be more akin to the sell-off that we saw in July, August, down 19 or 20. And I think that has to be on the corkboard, if you will, for those who are in this commodity. But not many people are in this commodity, NYMEX crude. Let's look at finally a chart of energy stocks. So this chart is important. This is the myth of energy outperformance, of value, and so forth. We're looking at a 5-year chart. The top is simply the entire energy sector as measured by any ETF you want or the SPDR XLE. The bottom is relative performance to the S&P. And there's no way around this. If you simply were to look at that line drawn, right, that vertical line, that is the day the market peaked before COVID came. That's February 19th, 2020. And from that day to present, the S&P is up 39%, and the S&P 500 energy sector is up 4%. One has not been paid, especially beta adjusted, to be in energy. And I don't think one is still going to be paid to be in energy.
Got it. Carter with the warning. Thank you very much. Okay, Dan, what do you think? Heed this warning? Should we be careful in crude?
I always heed Carter's warnings here because they're based on charts, and he says the lines draw themselves, and in those instances they have. And I would actually point towards the OIH, which is the oil services ETF, and that thing has actually been quite horrible of late. And those two sell-offs that Carter just mentioned in crude, the OIH from its March high sold off about 27%. Then it sold off about 34% from its June high. Right now it's in the throes of a 15% sell-off, and that thing has just showed very weak relative performance to the XLE or crude oil. So that one looks a little dangerous to me, maybe back towards 180 in the near term. So as usual, I'm with Carter here.
Okay, Karen, opportunity or bad omen in the oil patch?
Well, I guess since I'm not a chartist, I look at it sort of a different way around. I look at it, if the economy slows, then that's bad for oil. Not that, it's just not how I think about it. But all that having been said, I love when Carter says to the penny, because it really just underscores how exacting he is. And I wouldn't bet against Carter. I've done that in the past. It hasn't worked out well for me.